It's like a freight train coming at you that can't be stopped. It's unstoppable. And in fact, it's being fueled even more with calls for lower rates, with a weaker currency here. And it's accelerating, and it's going to hit all of us broadside with such ferocity that people are not going to know what.
You're watching Silver News Daily. Subscribe for more.
Imagine waking up one morning to find that your money has lost its value overnight and the markets are in chaos. It sounds like a nightmare, right? Well, according to Greg Mannarino, this nightmare could become a reality sooner than you think. But there's a silver lining, literally. In today's video, we'll uncover why Mannarino is overwhelmingly bullish on silver and how this one asset could be your best defense against the economic storm that's brewing. Stay with us because what you're about to hear could change how you protect your wealth forever.
What we're seeing here, this effect of massive asset purchases here. And clearly it's the central banks getting in here. They're buying it all. What is their goal? To be the lenders and buyers of a last resort. They are clearly moving towards that as we move forward. And we're hearing, and you have to understand, and I think people get it here, we're hearing the same nonsense out of both prospective presidential people here. Harris and Trump are selling us the same trickle-down economics nonsensical scam that the whole world is locked into. I mean, every developed nation in this world is locked into some form of trickle-down economics, meaning let's make the rich more powerful and richer, and you're going to benefit from it. Well, how's that working out for everybody? It's not working. It doesn't work. It's a lie. I wrote a couple of papers on this recently, The Lie of Economic Lies. I don't know if you've seen it. Just came out recently, or I go over it, this economic lie that's being forced on people. And I actually suggested an alternative system to it. And I put it out. People went crazy. They're like, wow, Greg, this would actually work. And it would. It's basically opposite of what we're hearing. Trump and Harris are pushing the same economic agenda here. That is lower rates. We promise to lower rates. This is what we're hearing. And a weaker dollar. How does that help anybody? It doesn't. It's trickle down. It helps the 1% and 2%ers while destroying everybody else. That's what we're seeing here. Is it's being priced into the markets. It's rebalancing in many, many ways. But again, this is seasonality. This is geopolitics here. What's going on in the Middle East, or may happen at any moment. And look, it's too obvious to me, and it's too simple to understand what we need to do to stay on the right side. People are panicking. Do people actually realize? Of course they don't. But over the last 9 months alone, the S&P 500 is up 25%. Meanwhile, people are going crazy over this 2-day drop, Monday through Friday, that followed through Friday, and then followed through on Monday, because that's what the media does. Oh no, it's scary. Run for the hills. Emergency rate cut. I can't believe that. And you're absolutely right. That they floated out some creatures, and I forget, it probably was every single one of these mainstream media outlets. Emergency rate cut. This would be the worst possible thing that could happen, because it would send a signal to the market that things are very wrong. Things are very wrong. And the faster the economy comes down, I've been telling people this for years, the higher the market's going to go. And we haven't seen it. Yesterday, I added to I'm building a position. I've been building it.
Let's take a step back and look at the bigger picture. Our global economy is standing on shaky ground. Central banks around the world are intervening at an unprecedented scale, pumping out money like there's no tomorrow. But what does this mean for you? According to Greg Mannarino, these interventions are not just a temporary fix. They're setting the stage for something far more concerning. Mannarino has repeatedly warned that the ongoing devaluation of currencies, driven by endless money printing and artificially low interest rates, is eroding the very foundation of our financial system. As central banks continue to flood the markets with cheap money, the purchasing power of your cash is steadily being eaten away. Mannarino argues that this is all part of a grand design, a deliberate move to create dependency on the system and weaken the average investor's position. But here's the kicker. While most assets are teetering on the edge of a cliff, there's one that stands firm: silver. Mannarino is betting big on silver, and for good reason. He believes that as currencies lose their value, silver's role as a store of wealth will only become more critical. This isn't just speculation. It's a logical response to the reckless monetary policies we're seeing worldwide. So, as we delve deeper into this discussion, Keep in mind that what's happening isn't random. It's a carefully orchestrated series of events that's pushing more and more investors to seek refuge in assets like silver. And as Mannarino puts it, in a world where the rules are constantly changing, silver is one of the few constants you can count on.
A time of a seasonal volatility here in the market. That's number one. This started just about 2 weeks ago. It will play out for the rest of this month. And then secondly, we got geopolitics playing into it. So, and I warned about this 2 weeks ago. I said we're going to see extreme moves in this market. And that's exactly what has happened here. With regard to the debt market, what we're seeing here, absolutely, you nailed it to the wall. We're seeing a ripple effect of this throughout the markets, including the currency markets here, the carry trade, all that stuff here. What's going on really, and this started weeks ago. We started to see a phenomenon where central banks, they're buying all the debt. They're buying it all. And here in the United States, we've literally watched the 10-year yield fall off of a cliff. As a matter of fact, the action that we've seen here with regard in the United States with regard to the 10-year yield, I never before in all the years I've been in this have I witnessed a drop, such a significant drop in the 10-year yield. Again, what the market is doing, you have to understand, the market is a forward-looking entity. It prices in things that are going to happen, that are actually happening. And this is why traders, for example, traders always get caught on the wrong side and they wonder why. Not always, but generally they will because they don't understand the dynamics here. The Nikkei, for example, they were calling it a crash. They would say, oh, this is it. This was just yesterday. The market has crashed now today. And then it rebounded like 10%. The shorts got destroyed because why? The traders are trying to capitalize in real time. If you're not ahead of it, you're behind it and you're going to get wiped out. Here in the United States, as another example here, yesterday, a record-setting day for puts or bets against the S&P 500. As we are doing this, the market's up 500, the Dow alone. And these people are going to get destroyed too. It's unfortunate they don't understand dynamics of this market. It's too easy. In fact, it's so easy, it's stupid. So
as we dive deeper into the current state of the global economy, it's crucial to understand the profound level of financial instability we're facing. Greg Mannarino has been vocal about this issue, warning that the financial system is more fragile than ever before. He sees the situation as a ticking time bomb, one that, when it goes off, will send shockwaves through every corner of the market. Let's break this down. Financial instability isn't just about volatile stock markets or fluctuating currency values. It's about a systemic vulnerability that has been growing for years. Central banks have been engaging in what Mannarino refers to as a controlled demolition of the economy. Through endless rounds of quantitative easing, QE, and artificially low interest rates, they've created an environment where debt has skyrocketed to unprecedented levels. The debt markets, in particular, are at the heart of this instability. Mannarino often emphasizes that everything in the economy is tied to debt. It's the backbone of our entire financial system. When debt becomes unsustainable, the whole structure starts to wobble. Mannarino points out that we're already seeing cracks in this structure. For instance, the massive swings in bond yields are not just market noise. They're a sign that the debt market is under severe stress. When bond yields spike, it's often a precursor to broader financial turmoil. According to Mannarino, this is exactly what's happening right now, and it's only a matter of time before this instability spills over into the stock markets, real estate, and beyond. But why does this matter for the average investor? Mannarino argues that in times of financial instability, traditional investments like stocks and bonds become highly risky. The value of these assets can plummet in an instant, wiping out years of gains. This is why he believes that holding silver is not just a smart investment, it's a necessary one. Silver, with its historical reputation as a safe haven, tends to hold its value even when other assets are crashing. In fact, during times of economic crisis, silver often does the opposite of what you'd expect. It goes up. Think back to the financial crises of the past. In each case, while stock markets tanked and bond yields soared, silver proved to be resilient. This resilience is rooted in silver's intrinsic value. Unlike fiat currencies, which can be printed endlessly, silver is a finite resource. This scarcity gives it a level of security that paper money simply can't match. Mannarino also stresses that the financial instability we're seeing isn't confined to one country. It's a global phenomenon. We're witnessing economic pressures in Europe, Asia, and the Americas that are eerily similar. Central banks everywhere are following the same playbook. Devalue the currency, keep interest rates low, and pump money into the system. The problem is, this approach is unsustainable. Mannarino warns that when the inevitable crash comes, it won't be limited to one market or one country. It will be a global event. So where does this leave us? According to Mannarino, the writing is on the wall. The current financial system is on borrowed time. The instability we're seeing is a clear signal that change is coming. And when it does, silver will likely emerge as one of the few assets capable of preserving wealth. This isn't just about making money. It's about protecting what you have in an uncertain world. In conclusion, Mannarino's perspective on financial instability is clear. He sees it as the biggest threat to investors today, but also as an opportunity. By understanding the underlying causes of this instability, namely unsustainable debt levels and reckless monetary policy, you could position yourself to not just survive the coming storm, but to thrive in it. And at the center of this strategy is silver, a tangible, resilient asset that stands as a bulwark against the chaos Mannarino predicts is on the horizon. As we move forward in this discussion, we'll continue to explore why silver is so crucial in the current economic climate, especially as we examine the ongoing devaluation of currencies and the rising geopolitical tensions that are further fueling this instability. But for now, remember this. In times of financial chaos, silver isn't just an investment, it's insurance.
Doing is going to give themselves permission to buy it all. And how do they do that? They have to create cash out of nothing, which is massively purchasing power negative, and then get into the market and buy all the debt. It's a revolving door. I've been trying to explain this to people. They issue debt through one door by creating cash out of nothing, and they buy it back to another. And this mechanism here, and no one's got the guts to tell people the truth here. They're going to be sold the trickle-down economic lie. They're going to be told that weaker currencies are better for them, and they buy it, and they yell and scream and cheer. They're told that lower rates are better for them, and they yell and scream and cheer. They're idiots. And they're counting on what happens here is they got people so locked into some kind of a psyop. They don't know. People don't know what's going on here. Again, it's the art of the deal. Mix truths with untruths, and you can get people to believe anything. And this is the hallmark of what we've seen, I think, going back as far as you want to go, with world leaders who have led their people to the slaughter. And I mean in the literal sense. It's no different here. It's turned into some kind of a sitcom freak show on an epic scale. We're supposed to be people who can govern ourselves. We can't be free if we're forced to live under the rule and guide of a central bank. That's number one. We need to take back the system. No one's willing to take it down. People actually believe that Trump wants to destroy the Fed. Same thing they said last time. Of the three last presidents, none of the last three have empowered the Fed more than that guy. He borrowed more, helped them. He couldn't do it, obviously. Helped to pull more cash into the now with the Fed than the other two guys did. And then, of course, the Clodvax bioweapon, which has killed thousands of people. And but let's not talk about that either. It doesn't make people happy. Look, the system is too wrong, and people have been polarized. It's unbelievable what's going on here. We've never seen anything like this. We're seeing families fall apart. We're seeing friendships fall apart. This is exactly what they're doing by design here. It's to keep people divided. You can't form alliances. Again, the structure of society has come apart. And this is part of the grand plan. You know this better than anybody. They want division. They want hatred. They want confusion. They want struggle. They want people to struggle because, again, if they're struggling, then they can blame the other side for it. It's unbelievable. And but people don't get it, and they won't get it ever. There's a fraction of people, like those that follow our work, for example, who understand. The others will refuse to see the truth, even if it's glaring in their face. It's unbelievable, in my opinion.
Let's shift our focus to one of the most critical factors driving Greg Mannarino's bullish stance on silver: currency devaluation. This isn't just a minor economic detail. It's a fundamental issue that's reshaping the global financial landscape. Mannarino has repeatedly highlighted how central banks, particularly the Federal Reserve, are deliberately devaluing their currencies. But what does this mean for you, and why should it make you seriously consider silver? To start, let's define currency devaluation in simple terms. When a central bank devalues its currency, it's essentially reducing the purchasing power of that currency. This can be done through various mechanisms, such as printing more money, lowering interest rates, or direct intervention in the foreign exchange markets. The end result? The money in your pocket buys less and less over time. Mannarino often refers to this as a silent tax, a way for governments to erode the value of savings without the public fully realizing what's happening. But why are central banks devaluing their currencies? Mannarino argues that this is part of a broader strategy to manage national debts and stimulate economic growth, at least in the short term. By devaluing the currency, debts become cheaper to pay off in real terms. This might sound like a clever solution, but it comes with severe long-term consequences, particularly for the average person trying to preserve their wealth. Consider this. When the value of a currency drops, it doesn't just affect imported goods, it impacts everything. Your groceries, gas, and even your rent could become more expensive. But the real danger lies in what happens to your savings. Mannarino points out that as currencies lose value, the real worth of your savings diminishes. This is particularly troubling in an era where interest rates are already at historic lows, meaning the returns on traditional savings accounts are almost negligible. In this environment, simply leaving your money in the bank isn't just unwise. It's a losing strategy. This is where silver comes into play. Mannarino believes that silver offers a hedge against this kind of currency devaluation. Unlike fiat currencies, which can be printed in unlimited quantities, silver is a finite resource. Its value is intrinsic, not dictated by government policy. This makes silver a powerful tool for preserving wealth, especially when the purchasing power of traditional money is being systematically eroded. Mannarino frequently compares today's economic conditions to historical precedents, where currency devaluation led to significant economic upheaval. For instance, in the Weimar Republic during the 1920s, hyperinflation rendered the German mark almost worthless. People who had their wealth tied up in currency saw it evaporate in a matter of months. However, those who held tangible assets like precious metals managed to protect their wealth. Mannarino sees a similar pattern emerging today, albeit on a global scale. Another aspect Mannarino often discusses is the global race to the bottom, where countries compete to devalue their currencies in order to boost exports. This practice, sometimes called competitive devaluation, can lead to a vicious cycle where every country is trying to outdo the others, resulting in widespread currency instability. In such an environment, holding assets like silver, which aren't tied to any single country's currency, becomes even more critical. Furthermore, Mannarino notes that currency devaluation isn't just a problem for developed economies. Emerging markets are often hit even harder. When major currencies like the US dollar or the euro are devalued, it puts pressure on smaller economies, forcing them to devalue their own currencies in response. This creates a ripple effect, leading to inflation and economic hardship across the globe. In these scenarios, silver's universal value becomes a safeguard against the unpredictable shifts in currency values. It's also important to recognize how currency devaluation plays into the larger narrative of wealth inequality, a topic Mannarino is particularly passionate about. As currencies lose value, those with fewer assets suffer the most. The wealthy, who often have diverse portfolios including precious metals, real estate, and stocks, can weather the storm. But for the average person, whose wealth might be predominantly in cash or low-yield savings, currency devaluation can be devastating. Mannarino argues that silver is one of the few accessible investments that can offer real protection in this scenario. According to Mannarino, now is the time to seriously consider diversifying your assets. Relying solely on fiat currency is becoming increasingly risky as central banks continue their policies of devaluation. Silver offers a way to hedge against these risks. It's not just about making a profit, it's about safeguarding your financial future in an era of economic uncertainty.
Raising their awareness and start to speak up. If you happen to be at a Trump rally, or you happen to be at a Harris rally, and you hear them promising you lower rates or a weaker dollar, scream at the top of your lungs, does this help me? It doesn't help you, okay? But you get to cheering. I can't believe it. When I sit there and I flip through these things, I want to hear what's coming out of their mouths. It was Biden and now it's Harris and now it's Trump. They're the same message here. And the people sit there and they yell and scream and cheer for this. They're signing their own death warrant here, okay? We do not need lower rates. They're already historically low. We do not need a weaker dollar. A weaker dollar, again, fulfills the corporate agenda. How does that help you? It kills the purchasing power of your currency. So really, you're expecting these same creatures? They're both creatures, in my view. I hate the system, and they're part of it. Okay, they're not out to save you. They're out to destroy you, and they got people by the throat. How they do it is, look, it's the art of the deal, and nobody is better at it than Trump here. The art of the deal. Have you ever read The Art of the Deal? It's a very interesting take on how to sell anything. It's a mixture of truth and maybe what are untruths here, and just putting them together in a certain way that people buy whatever you're trying to sell. And Trump is the king of this, but they all know how to do it. Harris is in it too. They're all involved in trying to sell us something that doesn't work, and people are buying it. Look at this other issue instead of focusing on the grander thing, which is destroying all of us here. And people, again, just like I said, they're walking themselves into a slaughterhouse. It's not going to change. Nothing is going to change moving forward. We're going to see massive, massive currency devaluation. The central banks aren't going to change their grand plan, which is to suck the purchasing power out of their currency. They're all in a race to the bottom to see who can do it first. And with this issue, with this is the thing that gets to me more than anything else. So we just found out that mortgage rates just hit a 1-year low. Okay, the Fed's not cutting rates though. So how does that work? Oh, the Fed's buying it all right now, but they're not making the announcement yet. Wait till they make the announcement here that
As we continue to explore the factors that make silver such a compelling investment right now, we cannot overlook the role of geopolitical uncertainty. Red Mannarino has been particularly vocal about how the current geopolitical climate is exacerbating the already fragile state of the global economy. From escalating tensions in the Middle East to the ongoing conflicts involving major powers like the United States, Russia, and China, the world is becoming an increasingly unstable place. But what does this mean for your investments, and why is silver positioned as a key asset in such times? Let's start with a look at the global landscape. Today's geopolitical environment is marked by uncertainty and conflict at almost every turn. Mannarino often points out that this instability is not just a series of isolated incidents. Rather, it's part of a broader trend of rising global tension. Whether it's the threat of military conflict, economic sanctions, or trade wars, these events create a ripple effect that disrupts markets and shakes investor confidence. One of the most immediate impacts of geopolitical uncertainty is the flight to safety. When investors sense that trouble is brewing, be it through war, political unrest, or diplomatic standoffs, they tend to move their money out of riskier assets and into safe havens. Traditionally, this has meant a shift towards assets like gold, U.S. Treasury bonds, and yes, silver. Mannarino has consistently highlighted how silver, in particular, benefits from these shifts due to its dual role as both an industrial metal and a store of value. But why silver, specifically? According to Mannarino, silver's appeal during times of geopolitical stress is rooted in its liquidity and its universal recognition as a valuable asset. Unlike other investments that may be tied to specific markets or economies, silver is globally recognized and can be easily traded across borders. This makes it an attractive option for investors seeking to protect their wealth in uncertain times. Consider the ongoing tensions in the Middle East, for example. Conflicts in this region have historically driven up the prices of precious metals, as investors flock to assets that are seen as safer bets during times of war or political instability. Mannarino often points to the fact that every time there's a flare-up in the Middle East, whether it's a new round of sanctions on Iran, escalating tensions between Israel and its neighbors, or broader conflicts involving global powers, the price of silver tends to rise. This is because investors are looking for a hedge against the potential economic fallout of these conflicts. Let's also not forget about the ongoing power struggles involving Russia and its influence over Europe, especially through energy supplies. The geopolitical chess game being played out over pipelines and energy distribution not only impacts the economies involved, but also has a broader effect on market stability. Mannarino argues that as these tensions escalate, the risk of economic sanctions and retaliatory measures grows, further destabilizing markets and driving investors towards safe haven assets like silver. Another aspect that Mannarino emphasizes is the unpredictability of these geopolitical events. Unlike financial crises, which can sometimes be anticipated through economic indicators, geopolitical crises often erupt suddenly and without warning. This unpredictability adds another layer of risk to the global economy. For investors, this means that the need for a stable, reliable asset like silver becomes even more pressing. Silver, with its proven track record during times of crisis, offers a level of security that few other investments can match. Mannarino also notes that geopolitical uncertainty can lead to significant changes in government policies, particularly regarding monetary policy. Central banks might respond to geopolitical crises by lowering interest rates or implementing other measures to stabilize their economies. However, these actions often have the side effect of further devaluing the currency, which, as we discussed earlier, makes assets like silver even more valuable. In essence, geopolitical tensions not only drive investors towards silver, but also create conditions that make silver more valuable in the long term. But there's another layer to consider. Geopolitical uncertainty doesn't just affect financial markets. It can also impact physical commodities. For example, silver is used in a wide range of industrial applications, from electronics to solar panels. Any disruption in global trade caused by geopolitical tensions can affect the supply and demand dynamics for silver, potentially driving up its price even further. Mannarino frequently discusses how the combination of industrial demand and safe haven buying can create a perfect storm that pushes silver prices higher.
For a while, I'm very, very exposed to the market right now, and I'm looking for every opportunity to gain more exposure on the long end, meaning I believe the market's going up. The phenomenon here, again, promises of lower rates. This is the Kamala Trump economic solution that they're offering us here. All this does is empower the Federal Reserve, quite obviously. Everyone with half a brain cell, don't even need one, understands the mechanism. Trickle down don't work. It's not working for anybody. All it does do is fulfill the corporate agenda here, and it obviously helps the Federal Reserve. The issue of lower rates, it's a beautiful thing for corporations here that trade overseas. They take advantage of the exchange rate, and of course they get more rich off of that. And the weaker dollar, obviously, is really the root cause of this. What's going to go on? So we're going to get both lower rates here, which are going to obviously how this works. People don't have any idea. Let's just put this into perspective real quick. Okay, the promise of lower rates, who does that really help? How does that help people? All it allows them to do is take on oceans of more debt. We just found out today that credit card debt, a new all-time record high. Household debt keeps skyrocketing here. People have no alternative here, again, because of the economic situation over the last three presidents who have done more to empower the Fed than any other three, before them going back to George Washington. But anyway, when you hear this kind of thing with regard to lower rates, this is how it works. It allows corporations to borrow next to nothing. When these corporations, they go out and they sell their debt, corporate debt, also known as high yield, and they capitalize on that. They borrow for it's almost like a carry trade in many ways here. So they're benefiting and profiting more so. But people can't do that. People take on debt. They can't finance that debt another way like the corporations do. And again, going back to this weaker dollar that were being promised repeatedly out of Trump's mouth more specifically, and now Kamala as well, saying the same thing. So we can rest assured here that the mechanism of allowing the Fed to become even more powerful moving forward is going to be in full swing, and I think to a much greater degree than even we've seen ever before. But we just heard from Fed President Goolsbee. Ghoul. You know what a ghoul is? A ghoul is an entity that robs graves and eats dead bodies. Well, Fed President Goolsbee just said, oh, this is beautiful. I have it right here. Headline from Fox Business. Can we see this? Goolsbee, he's promising the Fed's going to fix the economy. Oh, you mean the Fed's going to fix the economy? You see, what you're not supposed to know is presidents don't run the economy, although that's what we're being told. I'm going to fix the economy. It's central banks who run the economy, the markets, the financial system, but people have no clue. So it's easy for people to be lied to out of the mouths of prospective candidates here who don't have your best interest in mind whatsoever. It's the corporate agenda, period. And you need any proof. People, look around you. Look around you here. This market has been propped up on oceans of debt for the last three presidents, and that's all it's been is an illusion. Rah, 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 the stock market going higher and higher every freaking day. This is just, again, a mechanism here. We're a house of cards floating on an ocean of gasoline. It's going to go up, but not anytime soon because they're still in here suppressing rates, promising us lower rates, promising us a weaker dollar. It doesn't help anybody. It doesn't help anybody. It helps the corporate agenda. Period. Gone are the mom and pop shops. Why? Because trickle-down economics works so well. No, it doesn't. It fulfills the corporate structure, costs everybody else. And that's exactly what we're going to see here moving forward, no matter who is selected as the new president. I hope I covered a lot. I covered your question.
To truly understand why Greg Mannarino is so bullish on silver, it's important to look back at its historical performance. Silver is not just a commodity. It's a metal with a long-standing history as a store of value, particularly during times of economic distress. Mannarino frequently points out that while markets fluctuate in currencies, come and go, silver has stood the test of time, proving its resilience again and again. Let's explore this history and see why it matters now more than ever. Silver has been used as money for thousands of years, long before the advent of modern fiat currencies. Its intrinsic value, portability, and durability made it a preferred medium of exchange across ancient civilizations. Unlike paper currencies, which are prone to devaluation and manipulation, silver's value is tied to its physical properties and scarcity. This is a key point that Mannarino often emphasizes. Silver's value isn't dependent on any government or central bank. It's a tangible asset that has intrinsic worth, which is why it has always been a refuge during times of economic uncertainty. Consider some of the major financial crises throughout history. In each case, while paper currencies lost value and economies struggled, silver retained its purchasing power. Take, for example, the hyperinflation in Weimar Germany during the 1920s. As the German mark became worthless, those who held silver were able to preserve their wealth and even thrive, as they could exchange silver for essential goods and services. Mannarino draws parallels between these historical events and the current global economic situation, warning that similar conditions could arise if central banks continue their current policies. Fast forward to the 1970s, another period of economic turmoil marked by high inflation and the collapse of the Bretton Woods system. During this time, silver prices soared as investors sought refuge from the devaluation of the U.S. dollar. This era is particularly significant because it was the first time in modern history that the dollar was fully decoupled from gold, leading to widespread uncertainty about the future of fiat currencies. Silver, along with gold, became a preferred store of value for those looking to hedge against inflation and economic instability. Mannarino often cites this period as a prime example of how silver can act as a hedge in times of monetary turmoil. Another critical moment in silver's history was the financial crisis of 2008. As markets crashed and major financial institutions teetered on the brink of collapse, silver prices surged. Investors flocked to silver as a safe haven, driving its price from around $10 per ounce in 2008 to nearly $50 per ounce by 2011. This was one of the most significant increases in silver's modern history and underscored its role as a protector of wealth during financial crises. Mannarino frequently references this period to illustrate how quickly silver can rise in value when traditional financial systems are under threat. But it's not just during times of crisis that silver performs well. Mannarino also points to silver's role during periods of economic growth, particularly in industries like technology and renewable energy. Silver is a crucial component in a wide range of industrial applications, from electronics to solar panels. As the global economy evolves, particularly with the push towards green energy, the industrial demand for silver continues to grow. This dual nature, being both a safe haven asset and a vital industrial metal, gives silver a unique position in the market, one that Mannarino believes makes it an indispensable part of any investment strategy. However, Mannarino warns that today's market conditions are setting the stage for another major spike in silver's value. The combination of rampant money printing, historically low interest rates, and increasing geopolitical tensions is creating a perfect storm. In such an environment, the historical precedents suggest that silver is likely to perform exceptionally well. Mannarino argues that those who invest in silver now could be positioning themselves to benefit from a significant appreciation in value, much like investors did during the 1970s and the post-2008 period. One of the most compelling aspects of silver's historical performance is its relative undervaluation compared to gold. Mannarino often highlights the gold-to-silver ratio, which measures how many ounces of silver are needed to buy 1 ounce of gold. Historically, this ratio has fluctuated, but in recent years, it has reached levels that suggest silver is significantly undervalued relative to gold. Mannarino interprets this as a clear signal that silver is poised for a major upward correction. As history has shown, when the gold-to-silver ratio corrects, silver prices can rise rapidly, offering substantial returns for those who invested early.
To them, it's always the same story, but we've never seen this before, an environment like this. With regard to the financial system, it is so twisted. It is so distorted and disconnected from any kind of reality. And again, this had to happen because we had to be removed from a constitutional money, from real money, and being put on the system. That was the backbone of it. Once they had control of that, the control of the money, then what is now currency, it's not money, okay? That's it. Then they have us all in a headlock, which we cannot get out of, especially when we have world leaders all telling us the same thing, that this system works. It works for the 1% and 2%ers. It does not work for anybody else, quite obviously. And what I want people to do, look, I have friends all over the world. I'm sure you do too because of your blog. All right. Now, people around the world laugh at us. They can't believe how stupid we are. They feel like Americans are the most dumbed down on the planet. And I actually have to say that's actually true. People in the United States have been placed in little boxes. In other words, they can't think outside that box. Everything that's happening is just happening here in the United States. This is a worldwide event, people. Raise your awareness. Climb out of that box that you're being put into by the Harrises, by the Trumps. It's not just a United States American issue. This is a global problem that there is no solution because there's not enough people who follow our work. It's unbelievable, really, if you thought about it. If we were doing something ridiculous, licking toilet bowls, eating Tide Pods, we have millions of followers. But because you and I are out here talking about something that actually affects people's lives in a meaningful way and they could do something about it immediately, well, what do we got? collectively between, I got about 250,000. You got 100,000. You said it's almost pathetic, really. We should have millions, but we don't. Because again, they've been indoctrinated. But the people who follow our work, they get it. And you know what? Maybe that's enough. Because if every revolution starts somewhere, and I believe people like you and me and the people that follow our work are the revolution. We are the solution. And we do this by explaining what's going on here boldly, very directly. And if it's going to hurt people's feelings because they are a Trump supporter or a House supporter, I don't really give a damn. Okay. Maybe they need the smack across the face to wake up and understand how they're being destroyed, not just by the Harrises or the Trumps or the Bidens or whoever it might be, but leaders around the world who are working with central banks who have their bases all over the world. But people don't understand this. It's a war. These central banks are in every continent around the world. That's their bases. They have a war against the people, and they are the government. Their goal has always been the same, to be the lenders and buyers of last resort, to own it all with the product that they create out of nothing. This is why we don't have constitutional money. They move to this fiat system so they can buy it all with their product and give them permission to do it. Again, lower rates, weaker dollar, have leaders calling for the same thing. Nothing can make a central bank happier than hearing a prospective president saying, we need a weaker dollar. We need lower rates. And people are cheering for it. Help me. Someone out here who's smarter than Greg Mannarino, I'm sure that's all of you, explain this to me maybe as if I were a young child or a golden retriever. I just don't get it.
Now that we've explored the historical resilience and the compelling macroeconomic factors that make silver such a powerful investment, it's time to turn our attention to the technical side of things. Greg Mannarino is not just a macroeconomic analyst. He's also deeply involved in technical market analysis, which he uses to pinpoint when and how prices might move. Understanding the technical aspects of silver's market can give us further insight into why Mannarino is so bullish on its prospects. First, let's talk about the current state of silver prices. As of the latest market data, silver has been hovering around the $27 per ounce mark, with significant volatility driven by both geopolitical tensions and shifts in monetary policy. According to Mannarino, these price levels are just the calm before the storm. He predicts that once silver breaks through certain technical resistance levels, it could skyrocket to new highs, potentially surpassing its previous peaks. One of the key tools Mannarino uses in his technical analysis is the concept of support and resistance levels. These are price points where silver historically tends to find buying support or selling resistance. Currently, Mannarino has identified a critical resistance level at around $28 per ounce. This level has acted as a cap on silver's price for some time, with multiple attempts to break through resulting in pullbacks. However, Mannarino believes that this resistance is weakening and that a breakthrough is imminent. Once silver decisively moves past $28, he expects a sharp upward movement, potentially driving prices towards $35 or even $40 in the medium term. Another important aspect of Mannarino's technical analysis is his use of moving averages. Moving averages smooth out price data to create a clearer trend direction over specific periods. Mannarino often looks at the 50-day and 200-day moving averages to gauge the underlying strength of the silver market. Currently, the 50-day moving average is starting to turn upwards, signaling a potential bullish crossover with the 200-day moving average. This is a classic technical signal that suggests the market could be entering a new uptrend. Mannarino interprets this as a confirmation that silver's bullish momentum is building and that we could see a sustained rally in the coming months. In addition to moving averages, Mannarino pays close attention to trading volumes. Volume is a critical indicator of market strength because it shows how much conviction there is behind price movements. Recently, silver has seen increasing trading volumes during its upward price movements, which Mannarino interprets as a sign that institutional investors are starting to take notice. When big players enter the market, they bring significant buying power, which can drive prices higher quickly. Mannarino believes that as more investors move into silver, This increased demand will push prices past key resistance levels, triggering a broader rally. Mannarino also uses indicators like the Relative Strength Index, RSI, to assess whether silver is overbought or oversold. The RSI is a momentum oscillator that measures the speed and change of price movements. An RSI reading above 70 typically indicates that an asset is overbought, while a reading below 30 suggests it is oversold. Currently, silver's RSI is hovering around neutral territory, which Mannarino sees as a positive sign. It indicates that silver has room to move higher without immediately hitting overbought conditions. This suggests that there's still plenty of upside potential before the market becomes overheated. One of the most intriguing aspects of Mannarino's technical outlook is his focus on the gold-to-silver ratio, which we touched on earlier. This ratio compares the price of gold to the price of silver, and is often used to determine which of the two metals is undervalued relative to the other. Historically, this ratio has averaged around 15:1, meaning it would take 15 ounces of silver to buy 1 ounce of gold. However, in recent years, the ratio has been much higher, sometimes exceeding 80:1. Mannarino views this as a clear signal that silver is undervalued compared to gold. He predicts that as the gold-to-silver ratio normalizes, silver prices will rise more sharply than gold, providing significant returns for those who invest now. Furthermore, Mannarino's technical analysis is not just about predicting price movements, it's also about timing the market. He emphasizes the importance of patience and strategic positioning. Mannarino often advises waiting for confirmation signals before making significant investments. For instance, he suggests that investors should wait for silver to break through key resistance levels and hold those levels before going all in. This approach minimizes risk and maximizes the potential for profit.
Going way back. This is a very long-term plan that has been put in effect over a century ago. And we are right now, I believe, at the end game. And what they need to do is, again, we're going to see, of course, more war, more pain, more suffering on a biblical level, of course. And I believe still we're going to see things that people aren't going to believe moving forward. Unfortunately, I think a vast majority of the population of this planet is going to be eliminated. It's easier to control a smaller group of people. We're already seeing right before our eyes an extinction level event. That is, of course, the middle class here, because trickle-down economics works so well. And that's what we're being sold by both Kamala and Trump right now. It plays right into the agenda of the extermination here, a neo-feudal system, which I've been warning about for I don't know how many years now. It's just out of control. And there's going to be rioting in the streets, pandemonium in the streets here, and give them a justifiable reason to take more away our liberties and freedoms. But what they're doing here, and a big part of this was taking away their constitution money and adopting this fake, so let it be monetary system here run by the central banks. And people now are slaves to that system. Again, we went from a wealth-based system to a debt-based system. The system demands that more debt be pulled into the now in greater and greater amounts, and that's why we're seeing debts and deficits surge, and we haven't seen anything yet. The U.S. public debt skyrocketing. Why the last three presidents have played right into this, leading the people right to the slaughter, while at the same time having some kind of a psyop played on them via whatever it might be, some YouTubers or some other networks telling them the polar opposite is going to happen. It's a game on an epic scale. It really, really is. But unfortunately, what they're doing here is they must continue to institute trickle-down economics. That's why we're being sold this. Two keys to this are very simple to understand. It's exactly what we're hearing. That is a weaker currency and lower rates here. This empowers the central banks. It makes people more dependent on the system. They need to create dependency. I told people this is what's going to happen. You're going to see from years ago, I said members of the middle class were going to fall through the cracks into the lower rung of society. Now they're dependent on the system. The reason why they're not ready to pull the plug on this yet is there's not enough dependency yet. They need an event to occur, and it's going to, that is going to, first of all, it's going to catch everyone by left field. This is why you got to be ready right here and right now for what is coming. And I mean, I don't just mean from a financial standpoint. I mean mentally, physically, spiritually, physically, every aspect. You got to be prepared. Don't happen? Great. How does it hurt you? But if you're not ready for when this, first of all, it's like think of it this way. It's like a freight train coming at you that can't be stopped. It's unstoppable. And in fact, it's being fueled even more with calls for lower rates, with a weaker currency here. And it's accelerating, and it's going to hit all of us broadside with such ferocity that people are not going to know what happened.
After examining all the evidence from macroeconomic factors and historical performance to expert insights and actionable strategies, we've arrived at the most critical part of our discussion, the apex. Greg Mannarino has been unwavering in his message. The combination of currency devaluation, financial instability, and geopolitical uncertainty is creating a perfect storm, one that will dramatically reshape the global economy. At the center of this storm lies silver, an asset that is uniquely positioned to not only survive, but thrive in the coming chaos. So, why is silver the key asset to hold in this environment? Let's tie everything together. As central banks around the world continue their aggressive policies of money printing and interest rate manipulation, the value of fiat currencies is being systematically eroded. This isn't just an economic theory. It's something we're already seeing play out in real time. Prices are rising, your money buys less, and the future purchasing power of your savings is under threat. Mannarino's analysis shows that this trend is not only likely to continue, but to accelerate, pushing more and more investors towards safe haven assets like silver. But it's not just about protecting against inflation. The broader financial instability that we've discussed, rooted in unsustainable debt levels and volatile markets, means that traditional investments like stocks and bonds are becoming increasingly risky. As these markets face potential corrections or even crashes, silver's historical role as a store of value becomes more relevant than ever. It's an asset that has consistently outperformed during times of crisis, providing a safe harbor when other investments falter. Geopolitical tensions add another layer of complexity to the situation. With conflicts simmering in various parts of the world, from the Middle East to Eastern Europe, the global political landscape is more uncertain than it has been in decades. These tensions not only threaten economic stability, but also contribute to the growing distrust in fiat currencies and government-backed financial systems. Silver, with its universal value and historical significance, offers a way to opt out of this uncertainty, to hold something tangible that isn't subject to the whims of policymakers or the instability of global markets. Mannarino's technical analysis further supports this view. The market indicators he follows, such as resistance levels, moving averages, and trading volumes, are all pointing to an imminent breakout in silver prices. This isn't just speculation. It's based on patterns that have repeated throughout market history. As these technical signals converge with the broader economic and geopolitical factors, Mannarino believes we are on the verge of a significant revaluation of silver. And it's not just Greg Mannarino who sees this coming. As we've explored, other financial experts and institutional players are also recognizing silver's potential. Their consensus reinforces the idea that we're at a critical juncture where those who position themselves in silver now could reap substantial rewards as the market adjusts to these new realities. So what does all this mean for you? Mannarino's conclusion is clear. Silver isn't just an investment, it's a lifeline. In a world where currencies are losing value, where financial systems are strained, and where geopolitical risks are ever present, silver stands out as a reliable, tangible asset that can preserve and even grow your wealth. But the time to act is now. Waiting until the broader market catches on to silver's potential could mean missing out on the significant gains that early investors are likely to see. Are you overly reliant on cash, bonds, or stocks that could lose value in the coming economic downturn. You have enough exposure to assets that can withstand inflation and financial instability. If not, it's time to consider reallocating your portfolio with a strong focus on physical silver. Whether you're buying silver coins, investing in mining stocks, or even considering silver ETF, the key is to make silver a central part of your investment strategy. As we wrap up this discussion, remember this: in times of great uncertainty, those who see the storm coming and prepare accordingly are the ones who come out ahead. Silver is your opportunity to not just survive, but to thrive in the turbulent times that lie ahead. Make the choice to act now and ensure that your wealth is protected no matter what the future holds. And before we sign off, if you found this analysis valuable, don't forget to subscribe to our channel for more insights and strategies like this. Stay informed, stay prepared. As always, remember that this content is for informational purposes only and not financial advice. Do your own research and consult with a financial advisor before making any investment decisions. Thank you for watching, and we'll see you in the next video.
By design. And the other thing that people need to understand is this. The real issue, going back to the meltdown where the Fed stepped in with QE1, wasn't the market. It was not the market whatsoever. It was the fact that the system was locking. They had to. Why did Bernanke call this emergency meeting with our lovely, caring representatives to say, if we don't start to pump cash into the system, we won't have an economy on Monday? That's what he said. In his exact words, they had to free up the credit markets. The system is debt-based. We all know that. The flow of credit, they called it credit, but it's debt. The flow of debt through the system, currency being a unit of debt, this was starting to lock up. Interbusiness lending was stopping. The whole system what this would have led to, had they not pumped billions into the system, is you would go to your bank. There'd be nothing but zeros. There'd be no cash able for you to pull out. The ATM machines won't work. Credit cards don't work. Oh, we are going to get there. And this is what they're going to pull off. This is where the outcry is going to come from. This is where they're leading to. We're going to get another credit freeze. There's no doubt about it. That's why the Fed's in here buying it all. Why the central banks are creating currency like there's no tomorrow. Look at the Fed's what they're doing here, the currency. They've expanded since February. We've watched it balloon, the monetary base. It's insane. What's going on here? Again, look, in a time where an economy is actually booming, you would expect the Fed to expand the money supply, right? But we're not. We have an economy, a world economy, that's contracting at as fast as pace we've ever seen. But we're being lied to by the financial channels, by this, telling us how great we're doing. We're the envy of the world. That was Biden. Remember that? It's unbelievable. We may be the prettiest lady at the ball, but by far, we're in a lot of trouble. What are we trying to do? We're trying to make a positive difference. I really believe that. We have built a family, you and me, it's not big, huge, but big enough here. Between the two of us, around 350,000 or a little bit more than that. These are people that understand what's going on. And like I said, every revolution starts with something, just something small. I sincerely believe that one person has the power to change this entire world. So imagine what we can do as a group if we all came together. We didn't allow them to divide us, lie to us, buy it, a hook, line, and sinker. Realize what's actually going on. We can make a difference. We're going to be the people with the best chance of getting through this, because I sincerely believe we are marching towards a worst case scenario, another credit freeze. But this time the solution is going to be a whole new system. They can't re-prop this one up. Well, that's it, bro.
Greg, as always, thanks for joining us on Liberty and Finance.
Thank you for having me.
This is Kaiser Johnson with Liberty and Finance. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.